Hello everyone, it is great to have you back for another episode today. Today, I want to invite you to sit down with me, maybe with a cup of coffee in hand, or perhaps while you are driving to work, so we can talk about a fascinating story in the financial world. This story revolves around a character that anyone in the investment space has likely heard of. His name is Michael Saylor. But today we are not going to talk about dry numbers. We are going to talk about a philosophy, a heated debate about a simple question: where should our money sit to actually be safe? To start, let us use our imagination. Imagine you are the CEO of a company. Your business is doing okay, not spectacular, but okay. You have a pile of cash sitting in the company vault. Now, what do you do with that money? The traditional advice, the kind our grandparents might have taught us, is simple. Keep it safe. Put it in the bank. Or maybe buy back your own company stock to make the shareholders happy. Sounds safe, right? But Michael Saylor says no. He says that is a fatal mistake. Our story today begins with a recent wave of criticism. People have been attacking smaller companies that are trying to copy Michael Saylor and his company, MicroStrategy. These small companies, even some that are not making a profit yet, are going out and borrowing money or using their capital to buy Bitcoin. People call them crazy. They call them reckless. But Saylor, like a big brother in the Bitcoin village, stood up to defend them. In a recent chat on the What Bitcoin Did podcast, he laid out some arguments that I found incredibly sharp, yet very down to earth. He said that for companies with extra cash, buying Bitcoin instead of treasury bonds or giving it back to shareholders is actually a perfectly rational decision. Let me explain this part a little better. Picture your company as a boat. If that boat has a leak, meaning the business is losing money, then holding on to cash is like trying to bail the water out with a bucket that has a hole in it. It does not solve the problem because cash loses value to inflation every single day. Saylor gave a very specific and somewhat funny example. He said, suppose your company is losing $10 million a year because business is tough, but you hold Bitcoin and the value of that Bitcoin goes up by $30 million that same year. What's the final result? You are still up by $20 million. He asked the crowd a simple question. Did I not just save the company? Why are you criticizing the 200 companies that are brave enough to buy Bitcoin? Many people laugh at unprofitable companies that invest in financial assets, but Saylor sees it differently. He says if you were losing money in your business and you use your cash to buy back your own stock, you're basically committing suicide faster. It's like you're starving to death, so you decide to eat your own arm to survive. It just amplifies your losses. Instead, Bitcoin offers a totally different risk and reward profile. It's like a life raft pumped full of energy for your balance sheet. There's a quote from Saylor in this interview that really stuck with me. It was a bit stinging. He said, "The Bitcoin community tends to eat its young." Sounds a bit scary, right? What he means is, why do we criticize the 200 brave companies that buy Bitcoin, while out there are 400 million other companies that don't buy Bitcoin, that just let their cash die a slow death, and we think that's normal? We are harsh on the people on our own side, while we ignore the stagnation of the crowd. By now, you can probably feel Saylor's passion. He is not just defending his wallet, he is defending a new mindset. He compares corporate money management to personal investing. Whether you are a trillion-dollar corporation or just a regular person, the decision to hold an asset that cannot be destroyed by inflation is always a rational decision. According to the data I found, public companies currently hold about 1.1 million Bitcoin. That is about 5.5% of all the Bitcoin in existence. That number is not small, and it is growing. Even though the market goes up and down, people like Saylor believe that in the long run, this is the only way to preserve the energy of your money. Now, let us pause for a second. You might be thinking, what does the story of some CEO have to do with me? I'm just a normal person with a 9-to-5 job. Actually, it has everything to do with you. I want you to think of yourself as a company. Let us call it Me Incorporated. You have revenue, which is your monthly salary. You have operating expenses like rent, food, and gas. And most importantly, you have a treasury. That is your savings. So how do we apply Michael Saylor's thinking to ourselves? First, look at your treasury. What is in there? If you keep all your savings in a checking account or as cash under your mattress, you are acting like those companies Saylor criticized. You are holding an ice cube in your pocket while standing in the hot sun. Inflation and rising prices will melt that ice cube year after year. $10,000 today buys a lot less than it did 5 years ago. That is a real risk that we often ignore. Second, do not be afraid of short-term losses. Remember the example of the company losing $10 million but making $30 million on Bitcoin. In life, there are times when our jobs get tough. Maybe we don't get a raise. Maybe we're between jobs. But if you have allocated your capital smartly into assets that grow over the long term, whether that is Bitcoin, gold, or real estate, that growth can carry you through the hard times. It becomes your shield. Third, do not be too hard on yourself. Saylor talked about the community eating its young to describe impatience. When you decide to take part of your paycheck to invest and the next month the price drops, do not call yourself stupid. Look at the bigger picture. You are doing something that millions of people are afraid to do. You are protecting your labor from devaluation. However, I need to add a small warning. Michael Saylor is a billionaire. His company can survive big waves. Your personal company, Me Incorporated, might be a bit more fragile. So applying this does not mean gambling everything. Do not sell your house or car to buy Bitcoin just because he said so. Apply the mindset. Do not let your money die. Turn your idle cash into soldiers that work for you. Allocate a reasonable amount that you can afford to leave alone for 3, 5, or 10 years. Finally, the story of Michael Saylor is not just about Bitcoin. It's a story about challenging old rules. Why do we keep doing things the old way when the world changes every second? Why hold cash when cash is losing value? I hope today's story gives you a fresh perspective, makes you a little less fearful, and gives you some motivation to manage your personal finances more intelligently. Do not let yourself become a zombie company holding on to cash while fading into oblivion. Thank you for listening to these thoughts. If you found this helpful, take a moment today to think about how you can change the way you hold your money. I will see you in the next story. I wish you a day full of energy and wise decisions. Goodbye for now.